Hi, I'm Stacey from Fund Caliber, and today I'm joined by Jamie Jenkins, manager of the BMO Responsible Global Equity Fund. Morning, Jamie. How are you?
Good morning. Very nice to see you.
So the fund has a reputation for engagement and actually looks for companies that have problems to be solved. You even have a summary of your quarterly engagement on your fact sheets. And I noticed recently that you engaged with Acuity Brands. Can you tell us a bit more about them and where you kind of engaged with them?
Yeah, absolutely. So Acuity Brands is a fascinating company. It's a mid-cap company listed in the US stock market. We've held it for well over 5 years, and it's a world leader in LED lighting and smart lighting. We think LED lighting has a very promising runway of growth. I think the product itself has become a little commoditized. However, the solution that it can provide the world in terms of energy efficiency is significant. And Acuity has very advanced control systems, which allows that energy to be used more efficiently. One of the things we've been engaging with Acuity about is certainly about sustainability reporting. I think it's fair to say they're relatively early in their journey towards reporting around sustainability. So one of the things that we were asked to do was actually join their Sustainability Council earlier this year, where we were asked to provide insight and input and suggestions about what does best-in-class sustainability reporting look like. This is quite closely linked to the Sustainable Development Goals, and that was a great opportunity. That council was it had the CFO, it had the CEO, it had the head of sustainability, head of HR, so we could also talk about diversity and inclusion issues. And so that was a really great touch point to be brought inside that company's discussion around sustainability. And that's one example of where we've been engaging with this company, and we're really hopeful about the journey that they're on. We feel good about them as a long-term investee company for the fund.
That sounds like a really interesting partnership with a company. Do you find that your companies that you invest in do look to you as that resource for sustainability?
Yes, increasingly we do, because we've been quite advanced and quite early in our adoption of the Sustainable Development Goal framework. In some ways, companies, they see us almost as an unofficial consultant. They know they're meant to be using the Sustainable Development Goals, but they're not entirely sure how to use them. And of course, in our conversations with companies across a whole wide range of sectors, we have a very privileged position to observe how best to use the SDGs. And we've always said, this is not reporting for reporting's sake. Companies need to use the goals in a way which work for them as well. And at the heart of this, it's all about transparency, and it's about demystifying sustainability and allowing people to understand how individual companies are making or trying to make a positive contribution to sustainable development trends.
That's really interesting. Is there an instance then where you've engaged but ultimately still had to divest that you could mention?
Yeah, I guess the most high-profile example of that this year has been the company Microsoft. Now, we've had to sell Microsoft this year because the company breached our military criteria. And we took this decision after long discussion with the company. So Microsoft, as everybody knows, massive company. It's been very high profile through the pandemic because of the way they've enabled working from home trends, and that's all very positive. But they also have a gaming division. And in that gaming division, they have a business called HoloLens, which is a gaming headset that is kind of connected to virtual reality trends around gaming. And it came to our attention that Microsoft was starting to develop this headset for the US military. They were adapting the HoloLens headset to be used in an offensive battlefield scenario. And because we have a zero tolerance to strategic weapon development, after multiple touch points of engagement with the company, it became clear that Microsoft were working in close partnership with the US military to design a battlefield relevant piece of equipment that was tantamount to a weapon. And because of that, it became increasingly clear to us that here Microsoft was going to breach our zero tolerance to military products or military specific equipment. And that led us to make a very straightforward decision that for our core investors to adhere to our ethical screens, we needed to sell Microsoft. So we did that.
So I had no idea. That I feel like that's something that probably should have been more in the news, especially so many people invested in Microsoft. That's really interesting.
Well, I think because our screens have a zero tolerance to military, we've taken that position. I think some of our competitors will have a 5 or 10% revenue tolerance. So that sets us apart, I think.
Yeah, definitely. Well, it's shifting gears quite a lot from military. I did want to talk about finance. When we spoke previously, about 2 years ago, it was an underlying theme in the fund. I noticed that this has decreased slightly in the kind of recent years. Why is this the case? What kind of opportunities are you still finding?
Yeah, well, I mean, sustainable finance as a theme is still extremely important to us. And I think, in fact, it's one of the things that sets us apart from some of our competitors. We see opportunity in financials. We have some fantastic companies that we think are making a positive contribution to sustainable development. But having said that, when we see greater opportunity in other sectors or other stocks, we will occasionally reduce that position. But if I maybe just call out a couple of really interesting companies in sustainable finance, the first example would be HDFC Bank. This is a very significant private bank in India. We see a huge positive story about financial inclusion, a really long runway of growth for this company. There's over 150 million people, probably 200 million people in India that are effectively excluded from financial services because they do not have access to bank accounts. And so HDFC, through their rapid deployment of technology, have got a very significant story to tell around inclusion. If you can have a smartphone, you can now have a bank account. And we think that's really important for bringing people into the real economy, protecting their livelihoods and allowing them to become part of the mainstream economy, not sort of blindsided by the fact that they don't have a bank account. So we think super long multi-year story there, and as an aside, HDFC are also promoting very vigorously women's rights. I think India does have a gender issue. I think gender equality is a difficult subject in India, but through their various outreach programs and financial outreach initiatives, HDFC Bank are doing a great job of both bringing in the unbanked population, but also promoting greater gender equality, which is really important in the subcontinent. Another great example of an innovative name we own is SVB Financial Group. This is a mid-cap Californian bank that is really funding what we call the innovation economy. They are an absolutely core financial services bank for a financial services company, providing loans and financial advice to a lot of technology and healthcare businesses on the West Coast of America. But also in the last 5 years, they've expanded across the US, into Europe, and even as far as China. So they are seen as a very, very wise institution that is allowing startups and post-startup companies to grow in a sustainable fashion, to grow in a way that is going to allow sustainable growth for these companies. And so SVB Financial is a super interesting company. It's very interest rate sensitive and an extremely strong bank. So we're very optimistic about this bank in the long run.
That's really interesting. When I was looking to prepare for this interview, I mentioned I watched an old video, which is the finance was a theme then. But one thing that really struck me was, and I'm going to quote you now, is that 2 years ago you said that we need to already think about a 2-degree world. Well, fast forward, we've had the recent IPCC report bringing forward the estimate of reaching this 1.5 degrees by a decade. The UN calling climate change a code red for humanity. It's all a bit bleak, especially considering what the world has been through the last 18 months to kind of hear a code red in all the papers. But what did you make of the report when you read it?
Well, to be honest, we weren't surprised when we read the report. We understand the severity of the escalation of the situation. We see multiple events around the world of how climate change is creating more severe, more radical weather patterns, weather events. And so, this is front and center of our mind when we're picking stocks, when we're portfolio constructing. We believe our fund was pretty advanced in terms of divesting from all fossil fuel exposure back in Q1 2016. Back at the time, it seemed like we were fairly early on the story. Now I think divestment's become a much more widely accepted approach around securing that 1.5 degree world. And I think everybody understands we're going to be very, very challenged to adhere to that sort of temperature increase globally. But we're quite optimistic about the ability of a whole range of industrial and technology companies to deliver solutions that are very, very much focused on sustainability and making a positive contribution to reduced climate change. We've already talked about Acuity Brands and LED lighting. Another fantastic company that we own is Schneider Electric. This is a French company, French industrial business that we bought during the pandemic sell-off. We got a really great entry point as the market sold off. And here is a company that is completely intertwined in all of the electrification trends we see before us. We see this, in industrial companies. We see it in the consumer space. We see a growing shift towards electric vehicles, for example. And, Schneider Electric is providing mission-critical equipment to buildings around reducing their carbon emissions, which is, we believe, buildings are the single largest contributor to climate change. So that's an absolutely critical energy saving. Schneider Electric are also providing electrical infrastructure for global data centers. We've seen a huge increase in data centers, and here Schneider Electric allow green energy to be used in data centers, renewable energy sources to be increasingly used, and they have the power control systems that allow stable, reliable, lower carbon data centers that are really powering our society. So companies like Schneider can do very well from these trends, but they can also make a real world change. They are really reducing carbon emissions. And so that's why that type of company is part of the bedrock of our strategy, and is why we consider ourselves to be a low carbon global equity solution for investors to think about investing.
And one of the most searched questions on Google is actually, why should individuals try and save the planet if companies and governments aren't? if this interview is anything, it's a testament to that, how that's not the case. And people are, trying to combat climate change and do it through, you mentioned innovative technology, different types of solutions. We've talked about quite a few companies. But what kind of final, reassurance would you give to these individuals who think, it's all hope is lost, Armageddon is coming, I should just do what I want anyway? What would you say to them?
Well, I think, we all have a vested interest to make choices that make a positive contribution. I think it's quite easy to be daunted by the scale of the threat, the scale of the risk. But actually, if each of us make personal choices that start to contribute towards a lower carbon, a more sustainable future, then that starts to affect real change. And you see that in commuting habits, you see it in your choice of vehicle, you see it in your choice of destination for holiday making, perhaps how much meat you're eating. I think that's how, at the grassroots, it's really possible to affect change. And how you invest your money is no different. You can make an active choice about how you invest in your money. And we have really tried to show over the last decade of running this global equity fund that it is possible to do well by the planet, well by society, but also for that to not impact your investment returns. And we're absolutely convinced that positive sustainability trends and long-term performance are completely connected. And I think that message is increasingly recognized by investors.
Well, as always, this has been incredibly interesting. Thank you, Jamie, for taking the time to speak to us. And if you'd like to find out more about BMO Responsible Global Equity, please visit fundcaliber.com. And don't forget to like and subscribe for more videos. Thank you.